From the morning reading, markets volatile but hold Monday's gains and rise on Election Tuesday. Priceline soars. All 10 sectors moved higher on Tuesday. XLU, XLRE, and XLI were the strongest sectors, while XLF was the weakest sector. Oil futures slid 12 cents to close at 44.83. Breadth weakened compared to the prior session as advancers led 1710 to 1279 on the New York Stock Exchange and led 1498 to 1227 on the NASDAQ. On that S&P 500 snapshot, a modest gain extends the relief rally. The Monday rally snapped a 9-day sell-off in the S&P 500, the longest sell-off in 36 years, and continued on Tuesday in a more subdued mode. The index opened lower, hitting its negative 0.37% intraday low in the first 30 minutes of the session, and then rose steadily to its 0.72% midday high. It then zigzagged during the afternoon and closed with a modest 0.38% gain. In 2 days, the S&P 500 erased about 85% of the 9-day sell-off. All eyes are now on the behavior of the markets when the election results are revealed. The 10-year note closed at the session at 1.88%, up 5 basis points from the previous close. Economically sensitive markets are doing well. First, the Dow Transports broke out of a new 52-week high, and now it's copper's turn. Many look to both markets as probable leading indicators for broader markets, though their records are mixed in that regard. When both transports and copper have set 52-week highs within days of each other, though medium to long-term returns in stocks were good, as well as sectors like industrials and energy. Stocks have enjoyed their third best 2-day pre-election rally. Out of the past 16 U.S. presidential elections with decent gains prior to the results, stocks have managed a more opportunistic 2-day performance only twice. After most of the others, stocks gave back some of those gains in the days and weeks ahead. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:02 a.m. Mountain Time, and I'm recording this in preparation for the market day of November the 9th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So, wow, what an overnight, and there's several great lessons here. Well, let's go first to the morning report. Obviously, in the overnight, and this, I always say at the time of this cut, and rarely does that matter so much as it does this time. If I had done this video last night, we could have been down over 100 points on the S&P futures, and frankly, about 75% of that has already bounced back before we've even gotten to the cash open. And as to what happens between now and the cash open is anyone's guess. And then, of course, there'll be the open itself, in which there'll be an opportunity for the cash market to participate in digesting this new round of news. And digestion is what it's all about, because you're going to have a situation where there were, the conventional wisdom was all wrong. The conventional wisdom said that Hillary was going to win easily. The conventional wisdom was that in the House of Representatives there would be significant losses, though the expectation was the Republicans would still manage to hold on to overall control. And in the Senate, that the Democrats were probably going to take control of the Senate. Well, this morning, you find a very, very different picture. And as a result of that, there are going to be sectors, industry groups, individual companies who would have benefited from a Hillary approach to government versus now where there'll be a different set of expectations. And it's in that stew of resetting some of those expectations across healthcare and other markets that are going to be part of the volatility that you have today. And at the time of this cut, right now, the S&P futures are down about 30 points from yesterday's close, or about 1.5%. But again, that's a fraction of where it was at some parts of last night. It was down about 4.5%, I think is the number I saw. Russell also down about 1.5%, as is the Dow. NASDAQ futures down a little bit more than the other three indices at just under 2%. Crude oil is down about 0.2%. Euro is essentially unchanged. The bonds are down about 1.5%, and then gold is up about 2%. And overseas action, you have China down about 0.2%, Hong Kong down a little over 2%, Japan down well over 5%. The DAX in Germany down about 1.2%. The United Kingdom down about 0.5%. And macroeconomic reports for today, you'll have crude oil inventories, the 10-year bond, but obviously the big one will be the one that's not even listed here. It'll be the digestion of the election. And in terms of looking forward to tomorrow, you'll have the weekly unemployment claims, the FOMC member Bullard speaking, and nat gas storage, along with a 30-year bond auction. And that also, the FOMC member Bullard speaking brings to mind, we're likely to see some differences in Fed policy going forward. So look for volatility also with respect to bonds and interest rates in the coming days as expectations are kind of set. I kind of doubt that Fed Chair Yellen will be in that chair for much longer, but we'll have to see just where some of these people resign their positions, and some of these people respond in different ways to the change in administration. So anyhow, let's go ahead and look at volatility. Obviously, the market makers priced in significant volatility coming into this election, even though conventional wisdom was saying that this is a done deal. They knew better, and you should always follow the volatility. That's one of the lessons here, that follow the volatility. Now, the volatility doesn't tell you that there's going to be a surprise, but it tells you that conditions are present for significant market action, and that in that, while sometimes you might not have significant market action, the conditions are present, and you've got to always pay attention to those possibilities. Now, the skew also very elevated at a 135, so there's about a 12% probability of a 2 standard deviation move, and at the very least we had that last night, probably closer to a 3 or even 4 standard deviation move would be my guess. Now, it won't end up looking like that, because if we continue with the current trend, we're probably going to end up with something much, much less than that, as the market seems to have already closed significant parts of that overnight action gap. IV percentiles are, for the most part, in the middle of the annual range. The S&P of 52, the Russell actually has dropped into the lower third to a 34, the NASDAQ a 40, the Dow a 45. On a close-to-close basis, there was no standard deviation size moves put in on any of the indices yesterday. Let's go ahead and take a look at those charts. This, again, is one of the reasons why we use futures chart, because we want to see the overnight action. And look at where that action turned last night, right at a former area of support. And remember, areas of support are not a price to the tick, to the cent, but rather an area. And indeed, after having plunged well over 100 points down to the 2025 area, we end up turning right here at this particular area of support. This line was drawn before the election last night as areas in which, if a market correction were to occur, and we've talked, we're at hedge risk level 3 as a, as a statement, that there was conditions ripe for a significant breakdown. Where might those go? We had the fib retracements and so forth. Well, here we are. When it's all said and done, we're back inside the price action of the last 2 days. We'll see where this goes once the cash market opens. Ultimately, while there's more volatility yet today and in the next couple days probably to be digested, right now we're still right in smack in the middle of the range. We're up above 2100 already, and this is we'll see where this goes. We won't make too much of this. There's a lot to be digested during the cash market. So this is certainly a candle that has a lot of work left to do before it closes. But you see in the overnight action, you had a bit of a false breakout to the upside as people early on were reading what they thought were accurate exit polls, which again turned out conventional wisdom to be wrong. And then the plunge during the overnight, and then the giant reversal, which at this point, this candle would be seen as a very bullish because of the response here, this long tail to the bottom side. That being said, there's a lot of information yet to come and to be digested into this market. And you're going to see the same kinds of things in the Dow. Look at that. It's just amazing, that overnight swing. This is why we were at hedge risk level 3. We spoke to you in the sessions coming into this that the conditions were present for significant breakdown. And the NASDAQ, you see the same thing. The Russell, also the same. Significant movement and volatility in the overnight. Let's go ahead and look at the other markets. Crude oil had a bit of a move, and look at that 618 right there to the nodder. It was the turning point. So sometimes it is what we call support and resistance, as in horizontal or diagonal support, but sometimes it's these hidden levels, and that's what we call the Fibonacci retracement levels, the hidden levels of support and retracement. There's some classic examples of that coming in last night. Gold, of course, when it was thought that you needed safe haven status, was well up in the overnight, and still significantly up in the overnight, but at the same time has given back much of that as the news has been digested and, more level heads have come into play. Now, we'll see in the sessions to come as to, perhaps we say level heads. This market could go either direction. We're still finely balanced ultimately in trading ranges on all these markets, even after last night's action, because we've come right back into the trading range as it stands right now. So very little clarity as to where the overall market is likely to go. You see here the bonds, and big breakdown last night, perhaps in terms of where we are this morning compared to last night. The bonds are perhaps the most significant mover in that it's actually held quite a bit of that move. And then also the dollar. And look at this. Huge candle, huge wick in the overnight. And as it stands right now, the dollar's practically back to where it was at the close yesterday. So here you got the close yesterday, 97.91. And the current price at the time of this recording, 97.87. Almost identical to where it was before this overnight historic election. So a lot of things going on. And when it's all said and done, you could say not much has been achieved as of yet, because we're still back in the trading range that we were before the election news came in. In terms of volatility, now this is the VIX, and you see all over the place last night, and certainly still looks to be well up. It's still in that 18 range. But a lot of that volatility has started to ebb off. So in many ways, this has been an event much like an earnings report, but this time an earnings report on the country. And we've had, the initial reaction, and then you have the reaction that takes place once, the press conferences start and people start talking about what they're going to do now that these things have actually become reality. And guess what? The media is going to have to start to actually listen to what is being said, because in the past they have just discounted it totally, that this was even a possibility. So now all that's going to have to start to be digested. So don't expect that this is totally over. We could have significant volatility in the markets in the next few days, as well as potentially the next few weeks, as a better comprehension of what this actually means to individual companies and industry groups and so forth come to mean. Okay, that's enough on the charts for today. Frankly, the charts during the day today are going to be very, very important, and in the coming days. In terms of the system here, our system doesn't change because there's an election or even a historic change in the expectation of conventional wisdom. These systems are built in a way to look at the market condition in a whole host of ways. And before yesterday's close, and then after yesterday's close, we had a lot of negativity on these reports, and that still is present. We're still market phase 5, the break of diagonal and horizontal support. That has not changed. The 3 market timing signals were all in very relatively weak positions. The first coming from IBD, uptrend under pressure. The second one, the GMI index, was a 3 out of 6 with a sell signal in place since 10-12. And then the third one, the stock charts decision point, actually had a couple new bullish signals come in yesterday, but obviously we'll have to see if that holds up through the action of the cash market today. These could very easily whiplash right back into the more neutral to bearish kinds of settings. But ultimately, short term, intermediate term, and even long term were very mixed and relatively poor signals coming into last night. And the market action as since then certainly hasn't done anything to tell us that things are in a nice stack and all normal in the world by any means. Position sizing opinions, both models have been calling for 50% in recent sessions. And then also yesterday we had a first day signal weak bull in the intermediate term market posture for the S&P. We'll see if that holds up today or if that whiplashes back down into a bearish signal. In terms of the hedge warning status, we're still at level 3. The conditions are absolutely present for significant drop in the market. Again, not a prediction, but it's a recognition that the system has come up with, that the conditions are present for a significant drop in the market. And then, of course, going into all this, we had our 3 strategy opinions in which we've been telling new positions for novice traders were not acceptable given the current market conditions. So much of this sounded probably kind of hollow in the last couple sessions, and we had not come up from level 3 leading into the election because of just this kind of possibility. It certainly is part of the system. In terms of the specific warning areas, you see the volatility base. It's still a sea of red. These are all mechanical. There's no judgment here whatsoever. And the market has been telegraphing for session after session of late that the conditions were ripe for significant volatility. In the trend-based area, you still have one of the 3. Actually, the new highs, new lows yesterday was neutral, and this intermediate term market posture actually turned first day as in less than 50 with a weak bull. So there was some improvement on trend base yesterday, and the key intermarket risk aversion indicators, we have all 5 of those still as risk off. In terms of sentiment, we had a relatively negative fear index at a 30, so sentiment also coming into yesterday was relatively poor. In terms of sector performance yesterday, obviously Monday and Tuesday, trying to anticipate and front run, and in much the same way that happened with the Brexit, the polls were just totally wrong, and wrong over and over and over again. Florida, North Carolina, Ohio, Pennsylvania, Michigan, just wrong over and over and over again in terms of these outcomes. So you have to be able to take a lesson from this as you go into future events with the markets and your trading and investing, that when conditions are present for significant volatility, that you have built your portfolio to be able to be prepared for that. And at the same time, doesn't mean that it's going to happen every time. It's just a probability of that the conditions are present, not the probability of an outcome. In terms of the market postures, you see things have improved leading up into last night, short to intermediate, even into the long term. Quite a few other sectors had improved, though we continue to see this problem where with this range-bound market, these signals whip back and forth and relatively high frequency due to in essence, the lines being just horizontal for the most part, and a couple up days or a couple down days, and you get a flip of the signal. So don't put too much into those until we see more consistency. And speaking of consistency, a few days ago, these were all red. Well, now the 1 day, the 5 day are green for the most part, but the 1 month and 3 month are still, for the most part, red. So we're still looking to get a clear trend breakout, and certainly part of that information is going to be digested into the cash market today. So that's enough for today. A lot of news still coming in. I'm going to go ahead and go to publish here and get this out. Disclaimers as always. Hit the pause button if you need more time to review the disclaimers. Also note the hyperlink down here at the bottom for the full set of disclosures. In the meantime, manage that risk. We say that every day, but some days it seems to be more true than other days. But it's all about management of risk to your portfolio and trading, and that's what provides consistency. So if you were properly hedged going into last night, if you had done the proper steps, the action steps that we talked about, you're in great shape today, and today is not a day, or even last night when we were down 100 points, should not have been a cause for concern to your portfolio or your trading. If you were having a significant sweating of bullets during that overnight session, that should be telling you something today, that you were over leveraged and not properly prepared for that volatility. So take that also and be digesting that today. And indeed, the other thing that we say oftentimes at this point is to go out there and learn something each and every day about your trading and investing. And I think there are multiple lessons to be learned and digested here today as we digest this significant event from the overnight session. Good trading.